Hi, I'm Michael Newrock and welcome to the Macro Levels Trading Strategy video. In this video, we'll be covering the support and resistance levels that the big players, the institutions, use when they're getting into and getting out of a trade. This is about positional trading, okay? Entering at a certain position and holding it for hundreds of pips. We're not talking about scalping the market or catching trends here. We're talking about identifying positions in the market and entering into that market at a certain point. Okay, up until now, I hope you've been picking up some insights with the previous sessions, the trend catcher trading strategy and the price flip trading strategy. If you have, please feel free to leave a comment, feedback, or even a question, and I'll certainly get back to you. And we'll be holding a putting it all together video very shortly. Okay, so let's get on with macro levels. So what we're covering today will be basic introduction, talking about invisible force fields and how support and resistance acts as these invisible force fields where price finds support or resistance, trading with levels, the buy rules and the buy steps for macro levels trading, and the sell rules and sell steps for macro levels trading. Okay, first of all, buy above support levels and sell below resistance levels. This is critical. No matter what trading strategy you're using, be it trend catcher, price flip, or any other strategy, it's vitally important to identify setups when they are above support levels for a buy or below resistance levels for a sell. The macro levels that I determine are based on major highs, lows, and consolidation areas of the monthly, weekly, and daily time frames. So although you get support and resistance on recent highs, recent lows, on the shorter time frames, we're talking about the super levels and therefore the macro levels. Because they are based on solid historical data, they act as very strong support and resistance levels, otherwise known as investor levels, representing potential profitable entry levels. The investor levels can be highly reactive and work well on their own or in combination with virtually any trading system. Okay, so think of these support levels and resistance levels as invisible force fields. Invisible force fields are the critical support levels, resistance levels, and consolidation levels in the market. Think of them as the lines in the sand that traders use to determine whether a price is supported or whether a price is under pressure. So let's have a quick look at an example here. This is on the dollar CAD, and it's just a screenshot from a couple of weeks back. The idea is that after you've identified what these super levels or macro levels are, you want to sell when price goes below those levels and buy when price is above those levels. So here you can see price dipped and closed below this macro level. The macro levels are these horizontal lines. It did it again when it rallied back up, tested the level not once, twice, but 3 times, and then fell back down. Here we can see another sell that almost reached down to this lower macro level, a buy here where it popped back up this macro level and rallied up, bounced back down, found support at the same macro level, rallied again, fell after finding resistance. We see another sell here, which went a little way, tested the level again and bounced through. Then we see another one here. So it's important to get into these trades, these positional trades, when the price is in close proximity to these macro levels. So a sell here, we see it drop down, we see it break through this macro level, form another sell setup, consolidate, fall again, fall below and close below this macro level, not once, twice, three times, but 4 times before finally falling down, finding support and bouncing back up, forming a new cell setup, and then making its way all the way down. We've got a buy here that made it up, and then currently the time of the screenshot, I was looking at buying into the market at that point. And we'll go over the rules in a moment. Currently, the dollar CAD is sitting up around here, but you can see, I hope, from this one screenshot that support levels are incredibly important. And if you haven't been using them today, then you should certainly consider using them from this point on, no matter what strategy you use. Okay, so what's better when entering trades? Entering trades when all the indicators of your strategy are confirming a potential trade, or entering trades when all indicators of your strategy are confirming a potential trade and the price is at a key support or resistance level that is in line with your intended trade direction. Okay, and so the other question I pose is what's better when setting targets? Setting a blind target of a ratio amount based off the stop loss, say 1-to-1 or 1-to-2 or 1-to-3, or setting targets based around key support or resistance levels. In other words, if you're buying into a trade, you want to look at where the next resistance level is and set your target appropriately just prior to that resistance being reached. Or if you're selling into a trade, you want to look at where the next support level is and set your target just prior to that support level being reached. Naturally, I'm a big advocate of locking in profits as you go, but these are the big key targets that you're striving for. So let's cover the rules. Buy rules. Price must be in close proximity to a macro level and have closed above it. Enter the trade at the open of the new candle following the candle that provided the setup signal. Place the stop loss a few pips below the macro level. Take profit 1 is set halfway to the next macro level. Take profit 2 is set a few pips below the next macro level. And take profit 3 is set to a few pips below the second next macro level. So let's have a look at an example. Right here we see price come down. We actually see it hit resistance on this macro level. And I'll just add right now that these macro levels don't change very often. I will determine what the macro levels are and leave them alone. So they won't be changing every week. It's more like they'll be changing every 5 or 6 weeks. Okay, because after all, they're based on monthly and weekly time frames. I use the daily as well, but particularly the monthly and the weekly. So here we are. We've got price coming down almost to the pip down to this macro level. So it's in close proximity to the macro level and closed above. Okay, it needs to close above the macro level. Stop loss is placed below the macro level. We've got take profit 1 here, halfway between entry and the next macro level, because these macro levels are on average about 150 pips apart. I mean, in some cases they're less, and in some cases they're more. So it's not based on anything other than looking at where those major highs, lows, and consolidation areas are. And take profit 3 is just prior to or just below the second next macro level. So let's have a even closer look at the steps. Step 1. Price must be in close proximity to a macro level and have closed above, which it has here. Step 2, enter the trade at the open of the new candle following the signal candle, or the setup signal. Step 3, place the stop loss below the macro level. Step 4, take profit 1 is set halfway to the next macro level. This is the next macro level, so halfway around here. Take profit 2, set it just a few pips below the next macro level, because you want to make sure that you hit that target. And sometimes it doesn't quite reach that next level of resistance. And take profit 3, is set just a few pips prior or below, in this case, the second next macro level. And in this case, we achieved a risk reward ratio of 1 to 10, which is huge. So if the stop was, say, 30 pips, we generated a reward of 300 pips. So let's look at the sell rules. Price must be in close proximity to a macro level and have closed below it. Okay, so it's just, these are the same as the buy rules, but the opposite. Enter the trade at the open of the new candle following the candle that provided the setup signal. Place the stop loss a few pips above the macro level. Once again, take profit 1 is set halfway to the next macro level. Take profit 2 is set to a few pips above the next macro level. And take profit 3 is set to a few pips above the second next macro level. So again, let's take a look at the sell rules in summary form. Right here we see price coming up close to the macro level, doesn't quite touch. Sometimes it touches, sometimes it breaks through, but as long as it closes as a sell below the macro level, then we're in business for a macro levels setup trade. So it's in close proximity to the macro level. We enter the market on the open of the new candle following the signal setup. Stop loss is positioned above the macro level. Take profit 1 is halfway from the entry, between the entry and the next macro level. Take profit 2 is just prior, and in this case just above the next macro level. And take profit 3 is set just above the second next macro level. Okay, in this case, a risk reward ratio of 1 to 5. As you can see, it continued to fall down, but certainly a great trade. And you can continue to trail it if you wish, but you need to be aware that these macro levels are extremely reactive. So sometimes when they hit a support level, they may bounce up. Or if they hit a resistance level on a buy, they may retrace, and sometimes quite violently. So let's have a closer look. Step 1, price must be in close proximity to a macro level and have closed below it. Step 2, enter the trade at the open of the new candle following the candle that provided the setup signal. Step 3, place the stop loss a few pips above the macro level. Again, we're looking at around 30 pips. It depends on the time frame. On the symbol that you're using. Yen pairs, for example, yen crosses use a lot more pips, but typically 30 pips, give or take, and it depends on what your reward is, depends on how far away the next macro level is. I typically use this strategy on the 4-hour time frames. I will use it on the 1 hour, and if I'm using any other strategy, then it doesn't matter. But as long as you're getting in on, a train catch trade or a price flip trade, when it's around these macro levels, think of them as buy zones and sell zones. Okay, so back to the steps. In step 4, take profit 1 is set halfway to the next macro level. Take profit 2 is set a few pips above the next macro level. And take profit 3 is set a few pips above the second next macro level. Okay, and that concludes this part of the training. Hang around because I'm going to go to the charts now and take a look at some examples. We're going to look at it live, so I won't be cherry picking any trades as I haven't in any of the training sessions. And we'll see how reactive these levels are and therefore why they are so important. Okay, so we're on the charts now. I'm going to go through about a dozen charts and just show you some examples. I'm not going to cherry pick any trades, just like I haven't in the trend catcher and price flip. We're just going to go live and see how these macro levels work. Now, I should mention at this stage, and I didn't previously, is that these levels don't change very often because they are based on the monthly and weekly data. In particular, we do use daily as well. So highs, lows, consolidation periods of those upper time frames. because of that, they don't change very often. So every 4 to 5 weeks, I will issue a new set of macro levels. And in some cases, they don't change for even longer than that. Okay, because if you can imagine on a monthly chart, 1 bar or 1 candle is 1 month. On a weekly chart, 1 bar or 1 candle is a week. Okay, so it takes some time for these macro levels to change. But every 4, 5, 6 weeks, um, they're certainly updated to give members um, the the up-to-date information on where these macro levels are. So we're starting on gold. Now you can see right here that it is bounced right off this invisible force field. It is, magic level. Now I'm not going to do this on every case, but we'll just flick through this one. 1255, 22, 1255, 22. Where did this come from? Well, if we look back historically, it actually came from this high here. Okay, so you can see, well, this level came from this high over here, and we saw resistance at that point. This macro level came from this level here. Okay, again, this one from here, and so on. So once these levels are in place, they're pretty rock solid. But they are really, really valuable when we drill down into those shorter time frames, into those 4 hour and even the 1 hour. But I do prefer to use them on the 4 hour. So over here we can see that it is bounced off this level. Okay, 1, 2, 3 times, twice virtually to the pip. So one of two things are going to happen at this stage. Price is going to rally up and possibly back to this macro level. As it did at this point, you can see it came down, came close to, not as close as this time, but close to, and then rallied up to the upper macro level. You may notice as well that I've got different colors for these different macro levels, and that is because some I've deemed as being primary macro levels and some are deemed as secondary macro levels. Okay, not quite as important, but still important nevertheless. Okay, so you see a possible buy in the making. If it drops below this macro level, then I'll be looking at selling again. Okay, so we sold at this point, buy over here. This was a little tricky because it actually closed right on it, and it didn't give us a macro level sell until closing quite a bit below that level. Over here, we can see that it closed just above the macro level, just a couple of pips above, and then it shot up. Okay, and you can see here, if I just scroll back, just for a bit of a look, you can see over here again was a nice macro level catch, finding that extreme support, using that macro level as support, going up to the upper macro level, finding resistance at that point, 1, 2, 3, 4, 5 times, dropping back down, almost back down to the lower macro level, this time busting through and closing through, giving the market the confidence that it needed to buy into the market, which at that point it rallied up until this macro level. And you can see this just going back historically through time. You can pick these levels, almost to the pip in some cases. So just looking at the euro, right now we're live, broker time May 19, and right now it's busted through this previous macro level. So at this stage, the next macro level based here is on 110.98, just under 11100. Okay, so we saw a nice sell at this macro level. And think of it again as a sell zone. Okay, and here when it dropped down to this point, and then again here we saw that as a sell indication. Here is a buy. Didn't quite reach the upper macro level, but certainly gravitated towards it. And here, of course, as well. Now, just looking back, once again, if we go to, say, the weekly charts, you can see this level was created from this high here. And, I won't go through it all now because it is fairly detailed and it is subjective in nature. But if you look at the highs and lows, the major highs and major lows, particularly of the weekly and the monthly, you can identify them pretty easily. Okay, here right now we're looking on the pound, and it's busted and closed through. It's rebounded back. As long as it stays above this macro level of 145.66, there's a good chance for it to continue rallying up. Okay. Scroll through to the euro pound. You can see similar kind of action over here. Looking back here, we had a buy. We actually saw a sell here, but it failed. But it used this level as a level of support. Okay, here, here, and then when it busted back up over again, this area was a bit of a consolidation, but eventually it busted through, gravitated towards the upper macro level. Because it broke through and closed so far above, it stayed above for quite some time, and then eventually made its way down. At this moment, I would be looking at entering a buy depending on the price action at this 76.56 level. We'll see how that plays out. On the Aussie, we can see going back, okay, a failed buy here. It crashed down through. That would have been too late to get into the trade at that stage using the macro level strategy. But if you use it in combination with strategies like trend catcher or price flip, it certainly will put you in a good position to get in at these buy zones and sell zones. Again, here it was a little late to actually enter the trade. We really want to enter sells when they're in close proximity to the macro level. Over here is a nice one here for a sell down to this macro level, and then it found support, rebounding back up. At this stage, we're looking at a possible fall down to the 70.12 macro level. Kiwi, very, very similar as with the Aussie. Aussie Kiwi, here we get a nice one. This is a great example here where it comes up to that macro level, finds resistance, tests it again, finds resistance again. So you could have gotten at any of these points and sold it all the way down. So target one, halfway between your entry and the next macro level. Target two, just prior to the next macro level, which would have been this one. And target three, down to the second next macro level. You can see here it used it as support, rebounded, gravitated back to this upper macro level, rebounded back down to this 107.29 macro level, found support there. It's broken through. So now at this stage, we'll see if it tests the market at that point again. Otherwise, it too could very well be on a downward leg to the 106.34 macro level. Okay, dollar CAD, we saw here a good example of a macro level buy, closing just above, pushed all the way up and broke through and closed above, retraced a little bit, found support at that macro level, and then continued its rally. Retraced again, found support again at this macro level or buy zone, rallied up again, retraced yet again, found support once again at the 128.32, and now it's pining for the 130.62. Now, if it doesn't break and hold above this 130.62, then I would be looking at staying out of the market as a buy and looking for a possible retracement before I got involved in that particular pair. So we're looking at the basis on this case that it's possibly overbought. However, if it busts through this 130.62 level and stays above that level, then there's a good chance of it going higher right up to 132.60. Dollar Swiss, great example here. We saw support at the 94.62 macro level, a retesting of it before sitting above, heading up to the 95.95 level and breaking above it and closing above it, I should add. And from that point, it rallied on to the 97.51 level. Okay, we can see it here, retesting that 97.51 level, staying above, and then using that as support to move higher to the 98.39. So at this stage, dollar Swiss, it's staying right above. We could see a retracement back down. If it stays above the 98.39 level, then we could very well see an ongoing surge up to 99.16 and beyond to 99.71, possibly even higher. Dollar yen, another good example over here. We came close to the 105.41 level, found support, and you can see that it rallied quite strongly to that 108.98 level, meandered on that level for quite some time, found support, and now it looks like it's heading towards the 110.65. If it busts through that and holds above 110.65, then we could see a very high likelihood of it pining for the 112.47. Euro yen, again, similar kind of story here. We can see it didn't quite come too close to the 121.15 macro level, but it certainly made head for it. We saw it as resistance here, support on the 123.31 level. And right now we're finding support at that 123.31 level. If it stays above, then again, we could get a move higher to the 124.96 level. If it closes below, then we could see the currency or the pair fall back down to the 121.15 level, which it was unsuccessful in reaching the previous time. And finally, just to wrap it up, the pound yen, great support here on the 156.78 level. Okay, we can see that it found support there, really rallied strongly, busted through that 159.99 level, used that as support until it reached the 162.58 level, found resistance there, and then a wonderful sell, straight back down through that 159.99 level and beyond, where it finally found support again after some time at the 154.73 level, and then it's back up again. So right now, where are we at? Well, as long as it stays above the 159.99 level, then there's a good chance for it moving higher towards the 162.58 level. So there you go. Very, very simple, but very, very powerful, particularly when it's used in combination with other strategies, but also as used as its own independent strategy, which I do all the time. And you'll find that institutions use levels more than any other strategy overall, even if they're using it in combination with another strategy. It's all about getting in buy trades at buy zones and getting in on sell trades at sell zones. Okay, if you've got any questions, feedback, or comments, feel free to leave them down below this video. Of course, we'll be drawing 1 to 2 people a month from now on and giving away a free 24-month premium membership while we have this special in place. Of course, as a premium member, if you'd like to join today, then you get all of these indicators, the trend catcher, the price flip, and macro levels as free bonuses, in addition to the special that we're running on the 12 months free for the Traders Elite membership. I hope you've enjoyed the last couple of sessions, including this one. Watch out for the next trading session that we'll be holding in the coming days. Until then, good trading, live well, and I'll see you soon.